Tuesday, October 13th, market analysis, Stan Ehrlich. We've got a very strong day today in stock indexes, not completely unexpected. Remember last Thursday, we got buy signals in 3 of them, and they're all doing very well. Here on the E-mini, and oops, I should say, I start with stock market indexes and then go to futures markets and then sometimes other topics. So the bullish engulfing on Thursday in oversold conditions, and that's custom RSI, and a slight variation on the traditional bullish engulfing, a little different than Steve Nissen's original, well, first major book out in the United States on bullish engulf or candlesticks. Nevertheless, similar. Point is, excuse me, I didn't expect the market to get quite so strong in this way, but very strong up days are oftentimes the end of rallies. They get, in some cases, not always, overbought. We are not overbought here, but we did get up to, and frankly through, in this case, some significant resistance. But there is still a lot of resistance, even if we can get up to 5,500, which is possible. Then the market could turn down and stay into a bear move, which I'm still basically expecting until October. So I'm just simply getting closer to the rally high, in my opinion. And I'm trying to peg, so my next spot is 5,502, 5,500. On the short-term E-mini, we've got the 5-minute chart. Very nice sharp rally starting from 4 o'clock or so a.m. California time. But this is not particularly bad or totally unexpected. In fact, our initial ER1 overnight position bought at the beginning of the trade line right here, late in the day on the 8th of August. And now 1, 2, 3 days later, we're finally getting a really good trade. Plus the fact that my smart trailing stop, that yellow highlighted line, is now locking in a net profit. Good. And the stronger it gets, the quicker the stop moves, etc. So good news as far as the trade. Spider, no signal, nothing at the bottom, but I've got to remind you, I had this head and shoulder top detailed before the downside breakout, which was on August 2nd. The next damn day, August 5th, Friday to Monday, of course, it reached my minimum downside objective. 2 days it took. So that pattern worked past tense extremely accurately, got oversold at the time, August 5th, and has basically been rallying since. Now, finally today, up into the resistance area, prime area for it to stop rallying, but not quite overbought yet. But we gapped up. 4 types of gaps. Common gaps, midway gaps are very rare. The 2 that are most important, in my opinion, are the breakaway gap, the beginning of a move, and there's a breakaway gap right there, and I said so on that date. And exhaustion gaps, which apparently was the gap on the downside from August 2nd to August 5th to create the objective fulfillment. That big gap is an exhaustion gap at this particular point. Fair enough to say that. Now, what about the one this morning? I think it's not a midway gap. I don't think they're very rare. Common gap, maybe, and then it'll be filled. We'll come back down to the high yesterday at a minimum. But if it's an exhaustion gap in a resistance area, then we're going to start a move down all the way to the lows we have had before, which was the objective to begin with, and down past that. Remember, I'm looking for October lows. Next, Spider, gapped up. And there's the little tiny gap, as I just mentioned, on the daily data chart a moment ago. So, looking for a turnaround real soon this week. QQQ, gapped up. In fact, it gapped up right across another gap on the way down. Don't see that too often. Now, it's getting into a resistance area. It has a little bit more leeway on the upside, maybe, and that is not out of the question. but it still wouldn't change my mind about the expectation of a turn down into October for all of the indexes. Next is the QQQ 5-minute. Very strong rally. It is obviously bringing a lot of attention to a lot of traders. Some that didn't buy in the last week or two are feeling left behind. That's a big psychological mistake. Never run after markets. You'll always buy the rally high. Okay, and the NASDAQ futures did provide us with a buy signal at the bottom almost, not really. Well, no, it was a good buy signal since now, 3 days later, high and last, we're making some very good money on this trade. And I think I've got it outlined, yep, on the 5-minute chart next. But this is coming into a resistance level. I could actually see the possibility. I don't feel comfortable with it getting up this high of 19,700, but it would get overbought if we went there relatively quickly and be prime target to turn right around and come back down. No change of opinion about the expectation of a big move down basically into October. By the way, over 90% of the years since 1997, we have had a significant buying opportunity in October, which I will detail year by year. I'll maybe have a special YouTube on it well before October, sometime September. Now, natural NQ detailing the trade we got into very late in the day on August 8th. Didn't do too much on the 9th, a little bit better on the 11th yesterday. And today, the 12th, took off like a bat out of hell. That's great. So now our protective sell stop, the yellow dash line, dotted line, is above our entry price and locking in a really great trade at the moment, which could get a bit better. Next, the YM today is having a bullish engulfing ER buy signal in progress. All we have to do is close above yesterday's closing price, which looks highly likely considering the fact that we're up a substantial amount and making new highs for the last week or so. Second buy signal. First one's doing obviously great. Short-term chart. Looking very, very strong, just like the others. I like what I see. Looking good. Okay, Russell. Rarely, we don't see him very often. We're getting a buy signal also today in the Russell, but it's just coming back up underneath the major resistance area. Will this buy signal have enough zip pop bang in it in order to fly up into that resistance area? Maybe. If so, we're going to get up to 2153 probably. And I can't rule out another move back up into this topping out area, but I don't think that's likely. 2190 would be my second and most friendly upside objective. Next, the Russell, short term. Because of the buy signal today, we are long, making money at the moment. Our stop is still a loss because we haven't rallied enough to lock in profits unless you want to. And then you can change the kicker and it will move the protective stop a lot faster. And it is not a specific distance from a highest high or close or something like that. It includes momentum features to it and a variety of others. Next, on the bonds, we're only rallying a little bit, but you know, this head and shoulder bottom that I've been talking about, and I'm taking this as being the first shoulder March 3rd, not the two little double bottoms back there. At this particular point in time, that's not part of the picture, but it could be later. So we'll see. Shoulder, head, shoulder right about here, timing-wise would be almost exact. But it is in the process of making the shoulder around the time, within a month early, of when it should have. And the price level's adequate. That led to a neckline across these two highs, and it was tested, dropped off a little, buy signal, up, and breaking out of the neckline. We have had a retracement. ended a few days ago. Could this make new highs for the whole trend like a head and shoulder bottom would normally? Yes, it could. But I have this idea in the back of my mind that we still have that October low coming up, and I have drawn a circle in here for the last several days in the price range and time frame in which I'm looking for bond futures to come down into. Period. 10-year notes. Same story, but I didn't draw my little circle, which would have been right around in here in the 10-year notes. Don't see the point of it at the moment, but we're in resistance. Next, we got crude oil. Today's high is about the same as yesterday, so a little resistance in a broader resistance area, and low and last coming down pretty good. That could very well have been the turn yesterday, and it kind of looks like stock market indexes at the moment, doesn't it? Really strong, big up day, retracements. Anyway, I expected to see a test of 71.60 pretty soon. Next, natural gas. No reversal, basically tested resistance, didn't quite get as high as I thought it would, and now starting to slip a little. My previous double top formation worked great, already was fulfilled at the very end of last month, a couple of weeks ago. Got down a little bit lower, oversold, bounced, we're coming down, new low soon. Heating oil. Kind of double bottomed out, but I don't believe that's going to be the case. I think heating oil is going to stall out, and that could be at any point here, maybe a little bit higher in these resistance areas, the yellow ones, and then start to chew its way into major support, and it could go all the way back down to 1.7, but basically bearish, looking for the rally to stop. Gold, platinum, and silver. We've been tracking some head and shoulders in platinum and silver. Gold is a broad sideways trading range with a slightly upward slanted series of highs. So I really can't rule out the possibility of it getting all the way to 25.38. Yeah, that's okay. 25.37, 38, yeah, in the next couple of days. But from where we are right now, which is around where the other tops were, it could easily stop and turn down. Next, we've got the head and shoulder top in silver developing fine, no problems. For weeks now, I've been talking about the small head and shoulder being the last shoulder of the larger head and shoulder. That's very unusual to see this kind of combination, but it's working so far. Great. I don't like the fact that we got two bullish engulfings that are both working just fine at this point. That implies the rally is going to be a bit more than I'm expecting, but that's me. The market signals said buy it on the 8th and reiterated August 12th, another buy signal. Currently, that one's a little bit of a loss and the other one's a small profit. I don't, my opinion, don't believe we're going to see too much of a rally here. The head and shoulder top is the dominant longer term formation, and these buy signals could also be a short term rally in a longer term bear move. That happens often enough. Like these, red sell signal on the top of the rally, only we got was a week down, and then it turned up and built the top. So, a little more rally, maybe 29.30, then down in general. Platinum, same, identical, almost identical story. Last shoulder, head and shoulder top in itself. There's your bigger pattern, and we got a sell signal on the exact high day of the head and shoulder top, period. Can't do better than the top day. Now, this rally hasn't broken any rules. I could allow it to come up even more, maybe 987, but somewhere between here and 987, I think it's going to flip-flop right back down and make new lows. Minimum downside objective down to 808. Next, high-grade copper. Buy signal yesterday. Down a few ticks this morning. A little bit of a loss on the trade at the moment. And that's where we're at. Oh, in fact, we just got stopped out a little bit this morning. Yep, we have a small losing trade on yesterday's buy signal. You could, oh, wait, that's not true. I don't think that's true. The longer term trade, okay. Nevertheless, we got a buy signal at the bottom. Sorry, a little complicated there. And that's copper. Let's go to beans, oil, meal, cattle, hogs. We also got corn and wheat. So oversold conditions currently, new low for the trend, dropping down even faster, accelerating. Implication, it's very close to a turning point back up. We might get a bullish engulfing green buy signal. We got one back here that worked extremely well. This one probably lost a little bit of money. Yeah, I can see the little dotted red line is a very small day trade loss or overnight loss. Buy signal back here did very small profits, not longer term, but that's the kind of thing we run into often enough, plenty of times. That's the one that we love, but you don't know that until after the fact. Every time I get a green, I hope for a longer term bullish, big profit trade, but they could turn into short term small profits or losses, either one. Next chart, I think beans are about to start to bounce. Soybean oil coming down to previous lows in a broad longer term, way back in May of last year, previous bottom. I do think it has more downside potential, but it might bounce a little first. It already bounced to resistance and stopped almost exactly where it should have just a few days ago. And now it's down 105. So almost a new low for the trend down. I wouldn't go short here, although there could be some more, downside. I like to pick turning points like the top of the market to the exact day. And this high also, bottom green. A lot of these there's another one that's really nice. A lot of these had very small profits or very small losses and false signals, but the key here is let your profits run, but limit your losses. Next, meal. Finally, yesterday we got to my minimum downside objective. Now we're dropping even further and oversold for 2 days in a row toward the support level. It's about to bounce also. I've got a variety of reasons here now to think that grains could bounce slightly, but I'm not telling you anything about longer term bull moves. Just don't see it. Bounces in a bear trend. Oh, yeah, that's correct. Corn. Buy signal yesterday. A little lower today, 5 3/4 at the moment. Not violating any rules. Let's see if this one works. We're in a support area. The last one worked just a little bit. The one before that lost a little. This one was great. The bottom to the exact day. Small loss on that. That one was very nice. That one was adequate. Let's see what happens with this one yesterday. Now, if you still like the long side of the market because of whatever you see or what I say, buying it at a cheaper price than what the system did, ER signals, yesterday is not necessarily a bad idea. You have a lower risk if you use the same stop and a greater profit potential. Next chart is wheat. We had a buy signal a few days ago. It did not work. Our tight stop got bumped out. No signal in the last couple of days, but there's the possibility of a bullish formation developing that if we do start to rally almost immediately throughout the balance of the week, for example, Wednesday, Thursday, Friday, I will talk about it in great detail. But right now, let it go. I'm still basically bearish in grains, but it's catching these turning points that I get a lot of pleasure out of. Next is cattle. Buy signal a couple of days ago. Great trade, still in the trade, working just fine. Up 35, net change from yesterday. 2 days in it. No problems. Stop is still a loss. I probably should tighten that up. I like what I see. Probably looking for moving up to 184.56, maybe even higher. Next, hogs. This is a significantly different appearance because of the change of contract months to the October hogs than the charts I was showing you before, which did depict a head and shoulder bottom developing. But this rally high right here, which is a bearish signal, was up here and therefore a sideways neckline. And these lows were up. This whole section of price action was up a little higher. But since early July, we have this price action and the backwardization of the price action adjustments changes the picture. Right now, basically bearish, looking for a test of lows. So the head and shoulder is not part of the discussion anymore. The bottom of the market did get oversold, but I had previously on the other contract month, I believe, a bullish engulfing at the bottom, if I remember correctly. So we're back to the E-mini, almost high and last. We just have a minor little turn here on the average, looking extremely good, but you know what I feel, very skeptical about a lot more move up. You have a great day. Profitable trading to you.